is an important show. And I was attracted by a tweet I saw from Jordan Roy Byrne. And he talked about how silver shares were outperforming the metal, which, if you remember, everybody, about 8 months ago, even gold bulls hated the miners because the miners were not performing. They would rally in sympathy and then give it all back. And the opposite is happening now. So, Jordan, welcome to the show. Jordan's on X at the Daily Gold, and he's written a book, The Once in a Lifetime Investment Opportunities. So, do you think this cycle, above all, welcome, and do you think this cycle that we're entering here, Jordan, is comparable on a percentage basis to the biggest bull market I remember was in the business in the 70s when they made it legal for people to own gold at 2. They took it down to 1, and that was a big run to 880 that peaked on the Russian invasion of Afghanistan. Is this one going to be like that, only on steroids?
Well, thank you for having me, Dale. Yeah, I agree with that. I think if you look at a number of different things, um, the best, I like to use historical parallels. We know that history doesn't always repeat, it rhymes. And there's
Yeah.
a lot of similarities right now to the mid to late 60s. Now, with respect to gold, I think 1972 is the best comp for where we are now. So I completely agree with your intro. But stepping back, looking at everything, I think we're kind of like mid to late 1960s if we're looking at all the asset classes. So that's something I talk about in the book. Like, I'm not sure, obviously, it's really hard to make predictions and project ahead, but I'm not sure how this bull market will end. I mean, I think with gold, it will have to end with gold coming back into the monetary system somehow, because there's no way we're going to be able to jack up rates the way we did in the late 70s and early 80s. Like, that's just
Yeah.
impossible.
Yeah.
Yeah, and so I think this secular bull, and again, I'm not exactly sure how it will play out. If you look at the last two, the 60s and 70s was a little different because the gold stocks in the 60s, like they really actually were in a 20-year bull market. So this one's a little different. But with respect to
That's
gold,
interesting.
there were basically two huge up legs. And so if you want to compare, the past to the present, then maybe you could say, well, we're in the early stage of a huge up leg that could last for a couple more years. Maybe 2029, 2030, we get a cyclical bear in there, and then we get the final blow off after that. So that's kind of how I'm thinking about how this will play out. But just the technically and for other reasons, the setup is very, very similar to the 70s. And so I think we're in 1972, if I could draw a
Okay.
historical
Well,
parallel with respect to gold.
plenty of innings left to play. Would you? So you're saying a beginning, and a lot of people uh, think that they're late. Okay, so if you didn't buy like things like AG was in the last month went from 5 to 8. So a lot of investors or traders would say, you know what, I feel late. I have to wait for a pullback. Um, but this looks like we had a nice little breakout in AG and SILG, the junior ETF. Another nice move challenging the high of the move. So this is just beginning, and you would buy breaks. Do you think we could trade 3,000 gold again before we head higher?
It's possible. I think maybe 3,100, but I don't want to say 31 or 3,000 is not possible. But right now, I would lean towards maybe 3,100 or even 3,150. And
Okay.
again, this is just a guess. I think, yeah, my guess would be on this correction that we'll basically kind of trade sideways for a couple more months, maybe 3 or 4 months longer. But as you probably know, that the longer we trade sideways, I mean
Yeah.
that could be the setup for the next leg higher. So I think the market right now is with respect to precious metals, it's trying to digest the huge breakout move that it made. So I think
Okay.
that's where we are now in a short term, maybe medium term consolidation.
Maybe into the fall, something like that. There's a tendency towards that time of year for gold to begin to perform, isn't it? Like November, December, usually seasonally, that's a good time.
Absolutely. And many of the past historical breakouts occurred in September. So that October at times can be a bad month for gold, but when it's in a bull market or a really strong trend, September tends to be a really strong month. And you sometimes see a bottom in late summer or midsummer. So we could come
Okay.
back and maybe retest the low, next month or even in August, and then possibly, the bulls start regaining control at the end of the summer. So yeah, but yeah, it could last a little bit longer than that.
Okay. And for someone to just trade the pure play like gold and silver, you don't have to be a genius, right? All you have to do is know the difference between the colors to know what you're doing. But when you delve into the mining sector, there are many pitfalls that people fall into in the mining sector. You really have to do a lot of due diligence and know what kind of debt they're carrying, whether they're exploratory or producing, different stages of development in the mines. So, is that what you teach in your book, or you do a lot of the due diligence for people, and then the fact that you recommend the stocks is really kind of an endorsement that you've at least looked at everything and you're not going to really be surprised. You bring up size. If a silver mine is too small, no one's going to take it seriously. So, what are your screens and filters for knowing which mining companies are of interest to you?
Yes. Well, I try and cover everything in the book. So there are a couple chapters on the stocks, and I also talk about why, I prefer juniors over the large caps. But
Okay.
yeah, there are so many pitfalls. So for traders out there, it is, you can't just look at a chart. It is helpful to get some knowledge. Like I would say subscribe to it, my newsletter or even other people out
Okay.
there if you don't like me. I mean, subscribe to a newsletter so they can help inform you. And I think in the book, like I talk about the criteria. I think it's just a quick way of giving people who maybe they're professional investors or they're smart retail investors, but they don't quite have a background in precious metals. So I'm
Right.
trying to give them like a real quick synopsis of like what they need to know. And I think with respect to what I'm looking at, one thing is I tend to favor developers and small companies that are growing production over the exploration companies. And the reason is I don't want to be betting on drill holes. I don't want to be gambling on drill holes. So I don't, and I do invest in some exploration companies, but for the most part, I look for small companies that they're building a big mine, and maybe the mine that they're building has like a multi-phase outlook where they can get into production. Maybe they'll start producing 50,000, and then they can ramp it up in two, three, or four. Or maybe there's a small company that's producing 50 or 100,000 from one mine already. They're going to be building another mine. So those are the types of situations I look at. And one thing I add to that is I like to look at the companies that are doing that, but at the same time, maybe there's exploration potential. I think you and your audience probably remember Kirkland Lake, which was a massive success from about 2015 to 2020, where I lost count how many times this project got taken over. The original company who held it 2015 or 2014, Crocodile Gold, they had some really good drill holes, but they were kind of starved for capital. They were acquired by New Market Gold, who then expanded this discovery. And then Kirkland Lake said, "Oh boy, this is so great. We need to buy this." So they bought it, and then eventually Agnico Eagle bought it. And that company, gold was not in a secular bull market yet. But
Right.
that company, Kirkland Lake, or I mean, if you go back and you own that, whether you owned that with Crocodile or New Market Gold, and you held on to that for 3 or 4 years as these takeovers, as the owner kept changing, I mean, that just, it was a spectacular discovery. So that's also something I'm looking for is um, companies that they're not only building mines and growing their production, but they're doing exploration at the same time because remember they consume their end product. So these companies do best when they're building a mine, like they're at the end and it's about to produce gold, but like 2 years later, then it's like the economics of the project are worse unless they've added to their reserves. So
Like
that's a real
Yeah, like every business, you need a pipeline,
Oh,
right?
exactly, exactly. Well, and I think I mentioned that in the book, or I've said
Okay.
that before. Junior producers that have a pipeline, they are going to perform better because they're going to get stronger valuations. Like that's another thing. Like, do they? There's a lot of small companies out there. Maybe they're doing well, but they only have 3 or 4 years of reserves, and people will look at it and they'll say, "Oh, well, why is this so cheap?" Well, they don't have 8 to 10 years of reserves. They only have a couple years of reserves. So the exploration, and here's the other thing: when a company is producing and it's earning cash flow, it doesn't have to dilute itself to invest in exploration. Like if you're just looking at a regular producer or a regular exploration company, every year, oh, we're going to raise 10 million, we're going to raise 20 million next year. That is increasingly dilutive if they're not
Right.
adding value with every drill program that they have. Whereas, again, you look at a producer, these companies are generating cash flow, and they could say, "Oh, well, we're going to spend 10 million or 20 million on exploration this year," and I mean, they can do great work with that, and they're adding to their potential future value. So those, I mean, I love investing in the producers or developers that are exploring at the same time.
Is it rare?
No, I mean, well, the example I gave before, Kirkland Lake, like that's rare. Like that kind of success is increasingly rare. I mean, one symbol you could bring up, I think, is Montage Gold,
Oh yeah.
MAUT.
Fabi told me about this a long time ago. Do you know her? She talks
I
about
do, I do.
uranium a lot. What's a symbol again, Jordan?
I think it's MAUTF.
And I was looking at it at a buck, and I didn't buy it.
Or
Uh,
I think it's M it trades in Toronto. Oh
there
yeah,
it
there it
is.
is.
That's
There
it.
it is.
Okay.
And so what happened with
Wasn't it taken over?
not yet, not yet.
All right.
So what
So
ha- what
this
what
is when
happened
I
with
saw it.
this?
Yeah.
Yeah, so it's in Africa, but what happened is, yeah, right around that time, they had this great big project. Maybe, I mean, the grade was pretty low. I mean, the economics were not great. They're fine. So it was leveraged. It's a big project, so it's leveraged to higher gold. Like, that's another reason you want big projects and big mines because they're more leveraged. But what happened is they made this discovery. I think they discovered like and this was like a four, I don't know the but it was like a four or yeah, like a 4 million ounce project before they made this discovery. So they discovered about 500,000 ounces and I think the grade is like somewhere from 1 gram to 1.3 grams, while the rest of the deposit, I think the grade was 0.7 to 0.8. So what happened
Wow.
is they made this great discovery, and then they can mine that first, so it completely changes the economics of the project. Like they didn't have to discover, 2 or 3 million ounces like the mine in Australia that Kirkland Lake had. Like the Montage did in many of these cases, you don't need to discover like 1 million or 2 million ounces for it to be a game changer. So this company, again, it was 500,000 ounces, and they just stick that at the beginning of the mine plan. And so their first couple years of production, and they're building the mine now. It's not going to be ready for a year or two, but their first couple years of production are going to be so high margin that they're basically paying back all the capex after a couple years, and then the rest of the mine, which is another 10, 15 years, it's basically free money. So again, these companies, they don't need to necessarily discover 1 million or 3 million ounces for something to be a game changer for their project. If they can just make a small discovery and they can mine that first, um,
It
that's
changes
really,
the economics. So
yeah, massively.
yeah. So
And
even the grade was better than what they had prior, right? It was
right. And
uh, go ahead.
well, I was going to say, and in Kirkland Lake's case, and other cases, like if they've already built the processing facility, the mine is already operating, and they're doing exploration at the same time. If they make that discovery, they don't need to build like a whole new, they don't need to build a mill or a processing facility if it's accessible, and the logistics around. They can just go ahead and like mine that. They could just go ahead and stick that into their mine plan. So it's like when a developer or producer makes a discovery like that, it's free money basically. And again, it doesn't have to be super huge.
Okay.
Hmm.
You bring up different owners, and like in horse racing, and even in the market, people bet the jockey. So who is the mind behind the minds? A very important factor for you in people that have had a track record of developing minds or just success in the industry. Do you follow them automatically? There are a couple that repeatedly do pretty well.
I do. And I would say, yes, that's very important. I think other people tend to um, place that at too high of an importance. I mean, for me, it's very important. For me, it's in line with like what's the quality of the project and the quality of the company. Like, how is it constructed? Is there insider ownership? And so I look at all those things. Obviously, management is high, but I also look at the quality of the project. And with respect to building mines and then companies that are already mining, of course, I look for CEOs and people who basically have built mines before, like they've done it before. So
Right.
so that's the kind of it doesn't have to be like the Lundin family is involved with Montage Group and they're top of the line. Like their track record is just sterling. Another company that's one of their companies is it's named after their family name, Lundin Gold, which I think is LUG in Toronto. And they have a mine in Ecuador. And I mean, that's just been a massive success. So yeah, so I would say um, betting the jockey is a good idea, but I would look at the company and the quality of the project alongside the jockey. Just if you're looking at all those factors, then it's like a no-brainer.
Okay. How about where the mines are domiciled? Are there, a lot of people don't want to invest outside of North America. They're nervous about South Africa. They're worried about potential nationalization or increased tax issues levied upon them by governments. Does that play a role?
It does, but this is another view I have that's kind of contrarian. I think a mistake that a lot of retail investors make is they don't want to go outside North America, as you said. And so then they get stuck in lower quality companies, that are in Nevada or Canada and those types of places. So I think that if you're going to invest in these companies, you have to open yourself up to um, other jurisdictions. Like for that, for example, these two charts that you showed, Montage Gold, that's in Africa. Lundin Gold is in Ecuador, which is a really prospective country, but really tough to operate in. But Lundins are best of the best, and they know how to do that. And so you can see these two
Yeah.
stocks, they made huge moves. So I think it is difficult for some people. Like they get spooked at every little news event in some place. But for me, again, the issue with that is retail investors, like they place that super high on their criteria. Whereas for me, and I'm not saying I do it better than anybody else, but for me, that's kind of low. Like I'm looking at, okay, the quality of the company, the quality of the assets, what's the value, and then where is it? Now, I mean, there's some areas that like I won't go. There's some areas in Africa. I mean, if there's terrorism, or Russia, I know that the
Yeah.
stand countries are kind of opening up, but there's some of those areas I'm really skittish. But again, it like the problem is if you only want to focus on a few small countries, you're turning yourself off to a lot of potential big winners. And so what happens is people get pigeonholed into Nevada in Ontario or Quebec, which are really good jurisdictions, but you end up owning something there in most cases that is really not that great, and it's just being sold because
Yeah.
it's in a great jurisdiction. So
Right. And they dilute the hell out of it because they're always paying IR guys with free trading stock and restricted because that's their Federal Reserve, is their shares.
right. And one other thing I'll mention about jurisdictional risk is um, now for me, since I focus less on pure exploration companies and more on developers and producers, once the mine is already being constructed and built, that removes so much risk because by the time it's built, you have all these stakeholders in the area. Like you have all the people who live there,
Right.
maybe they're working at the mine, they have jobs, the community depends on it, the tax money for the community. So jurisdictional writ, that's another thing. By the time a mine is being built and then it starts producing ounces, like whatever risk there was as far as the jurisdiction, it becomes a lot lower than what it was 2 or 3 years ago when there's so much there's so much less stakeholders. Again, when it goes into production, everybody in the community is depending on it. And so it's
Yeah.
regardless of and again, I don't want to belabor the point, but there's certain areas in these countries like Argentina and Chile, for example, they're great jurisdictions, but there's some areas in those countries that are like, wow, this is fantastic. And then there's other locales where it's like, you're never going to build a mine there. So you have to,
Yeah.
it's the same thing in the US. Like, you're not going to, we're not going to build a mine in Chicago where you're from, or like Seattle where
Right.
I'm from. That's never going to, I mean, California, unfortunately, I mean, there's some, really great projects there, but you
Regulation.
can't, yeah, you can't build anything there versus like Nevada is great, Arizona.
Yeah.
Well, it depends where you are there, but yeah, so it's
Okay.
not just the country, it's like specific areas of the country.
Maybe retail investors should consider, since in the last, especially since tariffs were announced, the dollar's been accelerating to the downside. So there may be an advantage in owning international gold miners if you do it in their currency. Most currencies are going to be appreciating against the dollar, except maybe the Turkish lira. Is
Yeah,
that
that's
do you do you look at it like if you buy a company in like you were talking about in Ecuador, uh, do you get could you do are you long in dollars or long in their currency? Or could you be choose a currency like I'm very bullish the Australian dollar. I think there's going to be a huge move to the upside in Aussie, partly because of natural resources. Um, if I bought an Aussie gold miner, and I don't know if you invest over there, uh, would I get a double bang for the buck because I'm long Aussie as well as the mine?
it's actually the opposite because they're paying their workers, all the workers there, and the cost of labor gets paid in the Australian dollar. So, but it's a very good point you bring up. You have to look at what's the gold price locally, I mean, I look at gold against foreign currencies all the time, but
Okay.
for example, gold against the Australian dollar, gold against the Canadian dollar,
Yeah.
um, when you go back to like 2014, 2015, before gold made that bottom in January 2016, the gold price was so strong. Like, I remember the Australian dollar was so weak in 2015, 2016 that the companies that had mines over there, and the Canadian dollar was weak as well. So the companies that had mines in those places, they actually bottomed first before gold. So if the dollar is going to get a lot weaker, then the US could be um, an even better jurisdiction, for at least the next 3 or 4 years while this, regime is in power. So
Okay.
that's what my guess would be. If you think the dollar is going to decline um, significantly from here, then that would make American mines more attractive because then the cost of labor and other things you're paying in US dollars. So in real terms, those things become cheaper.
That's a big deal to know, Jordan. Thanks for
Yeah.
sharing it. Uh,
Oh, my pleasure.
with all this information, and even if you're in the right trade and you've done all your due diligence, let me ask you a question that could help everybody, including me. Uh, did you buy this
I did.
montage? Okay.
I did.
Do you still own it?
I do. I've trimmed it a little bit, which means I've just sold. I think I trimmed it twice. Now, I'm not saying I trimmed it recently. I probably trimmed it around 250.
Okay.
Probably. I think I sold like maybe 1/5. I've sold maybe 1/5 a couple times. So maybe I own 60% of 2/3 what I did originally. But that's kind of my philosophy. Like, the way these stocks move, you still want to hold your position, but you have to bank some gains along the way. Like, you have to sell
Beautiful.
half. Yeah, you have to sell half in some cases,
Yeah.
or sell a third in some cases. And I'm not saying I bought at the bottom there. Like I think is that a weekly chart?
Yeah.
So when that started to take off, I was a little late as subscribers got in before I, but basically where you're pointing, that's where I got
Yeah.
in,
Yeah. I
like in the
figured the
middle of that.
breakout. Yeah.
Yeah,
Yeah.
but I
All right.
but I was
That,
I was looking at it like right before it moved, and so that times like there are some examples of that. Like I am looking at some copper stocks now that are and again I'm a gold and silver guy, but like I'm looking at the chart of copper and some of these copper stocks. I'm looking at them like okay, wow, like these look like where the gold stocks were like a year ago. And that's the beauty of like when you're in a secular commodity bull market is you can kind of just move from area to area. And so maybe like I'm still really bullish on gold and silver, but maybe copper stocks, for example, like that could be okay, you're a trader and you're looking for what's going to be the next thing. Maybe it's copper stocks. But again, that's not my expertise. I've
yeah.
only just
Like it was
dabbled into it a
it
little
was
bit.
uranium before gold, right? So
Yeah, exactly.
yeah,
Exactly.
yeah. So I mean, you know what that proves? Uh, that even investors, because when I teach people how to trade, I say probe, and you have to have your stop in, and then take partials, and then protect the remainder. Most people wouldn't have even held it to 250. Okay, say they got in at the base at under a buck. At a buck 50, they go, wow, 50% or here 200%. You always hold a core position because you never know, and that's what partials do for you. Do you scale in just like you scale out when you're going into a position, or are you all in at a position?
I might do two buys. So I might do an initial buy, and if it's a little small and if the stock is broken out and I think it's confirming what I thought, then I'll add to it. But I don't, beyond that, I tend to just do one buy.
Okay. And summer is just beginning. You have a symbol you want to share with people who are watching it live and who watch it later, maybe one of the copper stocks that you're talking about?
Um, oh, okay. Well, yeah, I
Or
tend to
or
not, I
anything.
tend to not like yours. Yeah, I tend to not give individual stocks, and I am gold and silver,
Okay.
but I think one copper. Here, one you can look, and again, I know very little about these companies, but I think in Toronto, like that's one I noticed yesterday.
Okay.
Yeah, now it
That's
is.
it.
I think it's yeah. It's not. I don't know how liquid it is, but you can look at a 10-year chart of that if you can pull that back, maybe like a monthly chart. But that's broken out of a huge. Um,
It looked, yeah, you could tell when something's liquid or not, but here's the monthly. So this is what you're talking about. It looks
yeah,
like how Montage looked before it started to go.
yeah. And so I know. I mean, I've read a few things about this company, and that again, if I'm looking at copper stocks, that's one I would look at. Another one I think it's Faraday. I don't know what the symbol is. It might be MFQ.
Okay.
And again, these are just stocks I just noticed yesterday.
Yeah,
Uh,
everyone do their own due diligence. That MFQ is not
or
it.
Faraday, like type in the name Faraday.
Faraday
Faraday
copper.
copper.
Here we
Yeah.
are. Okay, 84 cents trading right now. And there's the monthly. Probably too big of a picture for this one. It looks like it's only been out there for what, about 3 years
Yeah, a
trading
couple years,
publicly.
but yeah, if you zoom out a little bit, you can see if that um yeah,
If we
I don't
You
know what
waiting
the
for a breakout at 90 cents or something like that?
yeah, if you zoom, you can see it there. Like it's kind of, it started moving this week, but you can see, okay, if this gets above 90 to 95 cents,
Yeah,
this could have some run. And what I read is this is a Lundin company. So you're talking about the jockey. So
yeah.
that's what got me interested. So okay,
Okay,
you know that it's legit because there's, half the stuff out there is just not legitimate.
yeah.
There's tons of lifestyle companies So yeah, so those are just a couple of
All
things that
right.
piqued my interest yesterday.
What a great interview, man. And I love your jacket and your and gold. I really think that people should really take you up on this offer and read your book. It's free. So what just go to Jordan's X account and he's got a link to this and you get his book and you get maybe get a master's degree at TGG. Uh, you have a YouTube channel as well, or this is just
Yeah, I
privately? So
do.
this is YouTube. Okay,
Yeah, you
so
can.
all right. Well, uh, I'm impressed. Okay, I can talk to someone and in 5 minutes know if they know. And every you fielded every question, and I do agree. And when we wrap it with, I think this is the first time, and I don't know how many years that silver shares are outperforming silver. When's the last time that happened, buddy?
I don't know exactly when, but it could be to this degree. I would say I believe it was late 2009, or maybe it was
Okay.
middle or summer of 2010. But that was right before. And again, I won't. But this is important. I won't. I'll try and keep it short. But that was right before silver broke above 20 or 22. So I distinctly remember what happened then is like First Majestic, Silver Wheaton, companies that are still
Yeah.
around.
Yeah.
They were outperforming silver before silver took out that 20 or $22 and then made a really big run. So I'm suspecting that we're kind of seeing the same thing happen now, because if silver can surpass 37, it's got a little resistance at 41, and then there's $50. So I'm not surprised that the stocks are really showing relative strength there against silver. They're sniffing out, and I'm not saying it's imminent, but they're sniffing out what could be coming over the next 6 to 12 months.
Jordan Roy Byrne, everybody. You want to learn about the miners? Here's a great resource for you. So, Jordan, you survived an interview with me. That makes you my new trading warrior brother.
Well, thank you so much, Coach. It was great to be on with you, and yeah, hopefully we can do this again, and hopefully people will get informed on precious metals, and because a lot, along with yourself, I think there's huge potential. There are pitfalls along the way. I got a lot of scar tissue because I've been doing this a long time, but
Well,
knowing how to manage is really important.
yeah, and you can't step into a boxing ring without taking a hit. It doesn't mean that you're going to lose. And sometimes you get knocked down, but you get back up. And I'm sure you've had to do that a few times in your career. I need a calculator to tell you how many times I've had to do it. So really appreciate meeting you, and I look forward to following you in this whole historic move in the miners. Thank you, Jordan.
Thank you.
All right, everyone, that's a wrap. It'll be on the YouTube channel. Maybe Jordan will share it with his people too. I really enjoyed this interview. Had a good time, buddy. So
Oh, me too. Yeah,
see you down the road.
yeah, really enjoyed it,
Oh,
and
one last question. Do you play this? Do you watch the movie Goldfinger a lot, or listen to the theme song from Goldfinger?
I don't, but I probably should. I'm obsessed with gangster movies, so not
All
quite
right,
Goldfinger, but
all right. Well, the line is he loves only gold, and that wouldn't
oh,
apply to you anyway. So Goldfinger. All right. Take care, Jordan. Great
all
talking
right.
with you.
Yeah, thank you so
Adios.
much.
Thank you, buddy.